In this video, I will discuss stock dividends. Instead of issuing dividends of cash, corporations may issue dividends of its own stock. Like cash dividends, stock dividends are paid out of retained earnings. When a stock dividend is issued, retained earnings is reduced, while the paid-in capital accounts, like common stock, increase. The total dollar amount of equity is unchanged. Amounts are just moved around. Here are some reasons corporations issue stock dividends. Stock dividends satisfy stockholders' dividend expectations without spending cash. Stock dividends can increase the marketability of the corporation's stock. Stock dividends emphasize a portion of stockholders' equity that has been permanently reinvested in the business. Pause the video to write these journal entries down. If the stock dividend is less than 25% of a corporation's issued stock, it's considered a small stock dividend. Later, I will demonstrate these journal entries. Pause the video to write these journal entries down. If the stock dividend is greater than 25% of a corporation's issued stock, it's considered a large stock dividend. Later, I will demonstrate these journal entries. Note, it is assumed that a large stock dividend will affect the stock price. Therefore, the stock is recorded at par. The paid-in capital in excess of par account, which represents the difference between market value and par, is not used. A small stock dividend, less than 20 to 25% of the corporation's issued stock, is recorded at fair market value. This is based on the assumption that a small stock dividend will have little effect on the market price of the outstanding shares. A large stock dividend, greater than 20 to 25% of the corporation's issued stock, is recorded at par value. It is assumed that flooding the market with all these shares will affect the market price. So these shares should not be recorded at current fair market value. Here is an example of a small stock dividend. Medlin Corporation has a balance of $300,000 in retained earnings. It declares a 10% stock dividend on its 50,000 shares of $10 par value common stock. The current fair market value of its stock is $15 per share. When a 10% stock dividend is declared, the following entry is recorded. Debit retained earnings, $75,000. 50,000 shares times the 10% stock dividend times the $15 market value of one share. Credit common stock dividends distributable, 50,000. 50,000 shares times the $10 par value. Credit paid-in capital in excess of par value, 25,000. That's 75,000 minus 50,000. When the stock is issued, the following entry is recorded. Debit common stock dividends distributable, 50,000. Credit common stock, 50,000. Here is an example of a large stock dividend. Quest Inc. has 10,000 shares of $10 par value stock outstanding. On December 31, Quest declares a 30% stock dividend. The stock will be distributed to stockholders on January 20th, 2014. Let's prepare the December 31 entry. Remember, unlike a small stock dividend that is recorded at fair market value, a large stock dividend is recorded at par value. You won't have to use an in excess of par account. It's actually an easier journal entry. When the 30% stock dividend is declared, debit retained earnings, 30,000. That's 10,000 shares times the 30% stock dividend times $10 par value. Credit common stock dividends distributable, 30,000. Notice the absence of an in excess of par account. When the stock is issued, debit common stock dividends distributable, 30,000. Credit common stock, 30,000. This slide shows where the common stock dividends distributable account appears on the balance sheet. It's in the paid-in capital section as an addition to common stock. This slide shows the effects of stock dividends on stockholders' equity. Note that a stock dividend does not change total stockholders' equity. Before the stock dividend, $800,000. After the stock dividend, $800,000. Notice that $75,000 is taken out of retained earnings and put into the paid-in capital accounts. However, total equity remains the same. Which of the following statements about small stock dividends is true? Market value per share should be assigned to the dividend shares. In the stockholders' equity section, common stock dividends distributable is reported as an addition to capital stock. That's it for now. Happy studying.